Hey everyone, we got some great news for NIO stock investors as the company reported a surge in deliveries year over year. So let's take a look at the numbers and discuss what it could mean for NIO stock investors.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so NIO reporting it delivered 15,620 vehicles in April of 2024. That was up by a whopping 134% year over year. NIO delivered 45,673 vehicles so far in 2024, but that's only up 21% year over year. So the increase in April, I should say, is much faster than the increase for the full year, demonstrating or highlighting that perhaps deliveries are accelerating or it's getting better as the year is going on. It could be a result of multiple new models NIO introduced, and they're gaining traction now as consumers are appreciating the vehicle updates. Now, these deliveries consisted of 8,817 SUVs and 6,800 sedans, and that's pretty much been the trend worldwide. SUVs have been more highly in demand than sedans, and NIO's no surprise here. It's also delivering more SUVs than sedans. Now, on April 25th, NIO launched its 2024 ET7 model, a smart electric executive sedan featuring major enhancements in interior and exterior design and digital cockpit. The ET7 is tailored to cater to the demands of premium executive users. Deliveries began on April 30th, so that's going to help boost sales in May for NIO. Again, sedan not likely to be as popular as an SUV. Still, another updated model is likely to bring that nice refresh to consumers who, mainly car buyers and vehicle purchasers, like the model updates. Most purchases of vehicles are not out of necessity, right? People don't buy a new car because they need a new car. More often, people buy a new car because they want an upgrade. Maybe they've had their older car for 4 years or 6 years and they want to upgrade it, right? But that car could have lasted 10 years perhaps, but they just want to trade it in and get something newer, a newer design, a different look, a different type of car. And so these newer models really help boost consumer demand because it entices some individuals because they like the way it looks, they like the color, the design, or something about the car attracts them to a dealership to purchase the vehicle or to a website to purchase the vehicle. Now, NIO also announced on April 25th that they entered a strategic cooperation with Lotus Technology, a leading global luxury EV maker, on charging and swapping. I've been talking about NIO's swapping network as an interesting enticer to consumer demand. One of the biggest reasons people do not purchase an electric vehicle is because of the electric charging. The charging network is so much more inconvenient than filling up gas in your vehicle. Not only do they not have as many charging stations as they have gas stations, but it takes much longer to charge your vehicle versus filling up gas in your vehicle. NIO's swapping technology does save some time on that front and gets people going faster than they would if they needed to charge the battery traditionally the way it's been going. So that's an interesting little enticer for consumers to buy NIO's vehicles. Now, keep in mind that NIO's comparable year over year, that number, the 100 and something percent, might look phenomenal, but remember, it's comparing against a weaker time period last year. In the second quarter of 2023, the company only delivered 23,520 cars for the entire quarter. That was by far the weakest quarter in 2023 for NIO, where in Q1 it delivered 31,000, Q3 it delivered 55, and Q4 it delivered 50,000. So the second quarter year over year comparison is going to be easier for NIO because last year's second quarter was such a bad quarter. So these numbers, they're an easy comparison. Another thing I'll be looking out for when the company reports its second quarter results is the vehicle margin. They have been doing a good job increasing the margin. It was up to 11.9% in the fourth quarter of 2023. I'd be curious to see where this margin falls in when the company reports its numbers. So that's a key thing to look out for with these delivery numbers. Do not get too excited, and that's why the year over year, when you look at the full 2024 numbers, it's only up 21% year over year. These are solid growth numbers, but the company needs to grow at this rate or faster just to reach a sustainable scale. NIO's losing plenty of money on the bottom line, which I'll share with you in a little bit, and the company needs to ramp up delivery in order to reach a size that at least allows it to break even on the bottom line. I highlighted that I would share with you the net loss. So remember, in 2023 fourth quarter, the company lost 5.367 billion in RMB. 5.367 billion in RMB, and that was up from the same time last year in 2020. In the previous quarter, 4.55 billion. It was down slightly from Q4 2022 when it lost 5.786. So the year-over-year improvements here in net loss are not progressing fast enough. You see that from 5.786 billion to 5.367, a roughly less than 10% improvement, 7.2% to be precise improvement. And so the company's losing this sum of money on the bottom line unless it scales up faster or it scales up and generates better profit margin per vehicle. Those losses will mount up and the company will face difficult circumstances. It does have some money in cash on its balance sheet to weather some of this storm, but it needs to quickly get itself on a sustainable position because investors are becoming less willing to tolerate companies that are losing so much money on the bottom line. Investors are becoming less tolerant of these kinds of companies as interest rates have increased because the opportunity cost of capital has increased. Instead of investing in a risky stock like NIO, investors can put their money in a super safe US government bond that generates over 5% per year. And so investors are starting to question companies that are losing so much money and asking, when is this going to be profitable? And why should I stick around for that? Why not just put my money in a government bond for now? And then when this company shows some promise on profitability, I'll come back to it then. I don't need to stick around for these difficult times. That's what some investors are deciding, as you can see evidenced by the stock prices of many of these unprofitable electric vehicle stocks, which are all down, or which most of them are down considerably in 2024. Now, NIO stock popped on the back of this news, but it's still down considerably from its highs. So this is great news for NIO, but take a look at it among the bigger picture and understand where the company is, and celebrate the brief moment of good news and hope that it continues and persists longer term. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.